Hello everybody, this is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Okay, hey everyone, what a week it has been for me anyway, for this portfolio. I remember last Sunday when I going through my list of the sample markets and stuff, and I pointed out Hong Kong index has failed basic attempt to break above the 200 days moving average, and I say watch out because that's one of my system, and basically that is, to me, from my experience, is a good signal to, it's a failure signals, and there's going to be a bit of a problem if it failed to stay above 200 days moving average. And then promptly, last Monday, the index dropped down at 700 points, and continue basically throughout the week, just dropped down, I think more than 1,000 points now. So last week has been very profitable to me. Basically for me, one of the signal basically are these failures of breaking out above the 200-day moving average, especially that formation, that patterns on last Thursday, one stroke going above the 200-day moving average and then immediately the next day fall back below the 200-day moving average. That to me is like up and down formation has always been a good signal if the price stay below this pattern, and which happens. And I was quite surprised by the amount of drop, 700 plus point drop on Hong Kong Monday, and it continued basically fall away and then out to 300 points, that kind of things. But in a way, what is more amazing to me is over the last 6 months, 4-6 months or so, you see that Hong Kong in general, all this rioting and reporting news and stuff, and the market, the Hong Kong index is relatively, going through a side channel, didn't go down significantly, and has been propped up by something, just like the American market, which I'll talk about later. And I was always wondering when it's going to, pop. Last Monday, when I actually see the price drop and I try to find news what the hell's going on, it's basically not much. It just basically people just panicking a bit, and it just dropped. As far as also there was people in Hong Kong. Obviously, I listen to a lot of those Hong Kong internet channels on YouTube as well, on internet. And one of the guys I listened to basically was checking, looking at the future contracts and how they turn around and try to gauge and try to find out what the big boys are doing in the background, when they change hands, moving the future contract from up to down, from buying to sell and so forth, and covering themselves and so forth, and look at the volume. And they found some odd things happening during the day itself. On I think it was on Thursday, 7th of November, they see that near the closing of the day in Hong Kong for the stock market, there's a last change of the volume of futures, moving from buying into sell mode, so to speak. Either they're covering themselves or setting up the market. So that was a commentary, and they'll say and basically say, okay, what the hell is going on in there? There's something going to happen. And that was on Thursday, and people were saying, okay, be careful. There might be a possible signal. It might continue a few days, might not. We don't know. But then that's when I sort of. Then the next day, the price went down, not significantly yet, last Friday, and then that the same channel people say, the future contracts being on the short side has been increasing, and so on. So it sort of like gives us a signal to outsiders, so to speak, who don't watch the future contracts volumes, a hint of what the big boys are doing, so to speak. And for us, as a trend follower, you don't see that, nothing at all. But you see the chart pattern. even that formation, up and down formation I talk about, it's not really trend following, it's more like a chart pattern thing. But it does give you some indicator. So for me, basically, it's more like, okay, there's some sort of double confirmation here from the chart pattern as well as the volume of the future contracts, and that something might be happening. So I basically just watch out and be ready to basically more attention to Hong Kong index, be ready to move. But I didn't expect the price sort of jumped on basically Monday open down 700 points or something. Or I think down 400ish, and then it's going to continue to go down, and then hold the end up down about 700 points. So it's quite significant. And so I went and obviously my trend following system, the short term, basically gone reversed, and then from a buy I basically gone down to sell, and then the neutral, this system 2, total system 2 system actually go neutral as well within the week. And also the last couple of days, because the price Hong Kong index continued to move down, my 200-day to 50-day or so over 200-day moving average system also give a sell. So what basically is actually happening here is market can go very quickly, reverse very quickly. What it shows here is the emotion of people propping up the market, either the big boys doing something in the background, try to tempt people to say, however bad the Hong Kong politics in general, or how Hong Kong is at the moment, it doesn't affect the market and so forth, get people in and doing all sort of funny things. And then once you get in, while you're unexpected, the market just do something. So in Asia, there's a lot of this. So for all those people who think chart, which basically it's not just a technical thing, it's also show the emotion. But what it doesn't really show is the people, how the chart formation happens. It's a lot of human emotion there, but also trickery. For money, people will do anything for money. And for big firm, I'm sure in America we all know, you guys know, Lehman's brother went broke, all sorts of things. People selling mortgages, of people who can't afford for profit, that kind of thing. So there's a lot of emotions and funny thing going in the background. Chart doesn't show you it at all, and then your system, you basically are following it. If you do following, watch it properly, you can catch it, but it's always after the event, and it's human intuition trying to find out why the price went down or why the price went up, and try to understand it. But it's a lesson here is that is the market can go either way, and the emotion and also the trickery, people playing behind the background, try to trick people and so sort of things, will continue to some extent, try to make people help people feel easy and let the guards down. And once the guards is down, when everybody's jumping in down, suddenly boom, the market reverse, and you got locked in. If you're buying a lot, and suddenly the market reverse, and then you have to get out quickly. Lose as little as you can, or you try to anyway, and then stand aside or short the market. For those people who don't practice good risk management, or what the Chinese used to say, if you have one arm that's been poisonous, affecting the rest of the body, it's better to chop off your arm than to affect the whole body and ultimately you die. So sometimes trend following or trading, you have to realize that if the market suddenly just reverse and hurt you, like I said before, you need to cut your losses. Just like my episode or the podcast episodes, you do have to cut your losses. Sometimes, like gaps, it will go past your stop loss point. You will have a major emotional battle to say, the market will come back, and I'll just go wait. But the market might not, in this case in Hong Kong. Index just continue going down. If you have not cut your losses in the first on the first day, so to speak, and when the market gap it down, in this case $700 points, you feel a lot of pain. But if you have kept your position open and did not close it, you'll feel more pain during the week. And there was a couple of bounces, and you thought, it'll come back. Just like you lost the key on the sofa, and somehow your dog might bite it and took it somewhere else, and then your wife took it, left it on the coffee table, but you found it later on. And people take that mindset to the market and say, oh, what goes down will come back up. Sometimes it don't, or it takes ages. Some never. And like I remember, like in UK, we in the .com bubble time, the one that I got in and hurt me a lot is lastminute.com. That's at the height of the boom market, of the internet market boom in UK, and then that basically get on the market, didn't make too much money, and then quite quickly falls off the cliff, so to speak, and lost a lot of money for a lot of people, me included. And at the time, I didn't have good risk management. I continued holding. Today, I still have that stupid certificate here, and I just keep it as a reminder to myself. That was the most stupid thing to do when it's even, I bought like 120 or something. It went down to like 10p or 5p. I mean, during all this time, I should have cut it, but I didn't. And I learned my mistake, basically. Say if that's the first time, if I'm like 128, whatever, if you've gone down to that quit, I should get out. I should have got out ages ago, but I didn't. And this is exactly the type of things that when actual life trading, you will find out. And also, the problem here is in the reverse. If you do, you compare that with simulation, demo account, you don't have that emotion there to check. You might see, oh, it's not a job. You might just do calculation and keep track of things and to backtrack, or using paper trading to test your system. But that emotion is not there. But when you put actual money in there and you're actually making money, suddenly you reverse and you lose all the money you made and then some, and you have to get out of position. That type of emotional disruption is very hard to basically comprehend if you are just doing a demo account. And it takes a lot of failures and practice, so to speak, to get yourself past the point that, okay, taking losses is just part of the game. You just have to take the first one, which is always, in hindsight, most of the time is the smallest. If you let the losses run instead of chop the losses, these losses, small losses, will become a bigger losses, and become humongous losses, which might kill your account. And that's how I blow a couple of my accounts. And I'm sure a lot of people blow their accounts a lot of times. So what we call the shark bite, they come in, suddenly a whale bite or a shark bite comes in, a big white shark bite, and a big chunk of your money, account money, gone. And then you continue with that type of attitude and risk management, your account just blow up very quickly. And so this is why I precisely spend a bit of time to actually talking about this, is because precisely of the the how the market actually doing. Basically, the trend falling, you can never touch the top or touch the bottom. Things to happen, and there are indication in charts to actually shows you if that happens. If you have done it many times, trading many times, certain patterns stick into your mind. And then when you see those, watch out. Still follow the system, but watch out. You can either tighten your risk, or your risk level, stop loss level will be higher, or basically like I do, is basically watch the market more precisely, more particularly. Okay, and if the market turn, just get out. Don't try to be hero in the stock market when you're actually trading. There's no heroes there. If you lose money, get out. And keep your powder dry, so to speak, keep your money in the account so you can take the next trading signal. And exactly what I need to do here. So on this one, it was I watched the market and the signal actually came in, and I was basically watch a bit more than usual. And I managed to make some money out of it. I not make as much because obviously when the Shanghai index actually was in last couple of weeks have been on uptrend. Of course, I give back some to the market when the market turned on its head, on its dime. But because I've been watching the market more closely, which is what I'm doing anyway on a daily basis, keeping that practice of watching the market on a daily basis, you catch the signal, sudden turning the signal, and then you basically get out of the market and basically go reverse. So one of the successful trade that success trader does is, I'm not there yet, but I'm getting there, is that if the market, whatever your system, your signal actually tells you going up and suddenly turn on its dime, you better get out. Okay, get out, and then what you do, don't just stay out on the market. You get out and reverse your trade. So like this, Hong Kong index is initially going up, the market turn on its head, and your system, being a lacking system in trend following, you're always lacking. I mean, a bit behind the curve, so to speak. Your signal comes in and say, oh, get out. You get out, which is good. But the next part that you need to do is you don't just get out. You also go reverse. So instead of buying, a couple of days later, the signal comes in. You stop yourself out, and the signal comes in next. You say, okay, go in to sell. You go and sell. Okay. Now, depends on your time frame. Some people can do on a dime, so to speak, because they are, let's say, they're doing a day trading using trend follow, which they can, but I don't do that, but they can. If the time frame suddenly change over, the signal change over the time frame, over the period that they're tracking, they just get out. So some people actually, especially the big boys I heard about or read about, they are on the trend, they're making money, suddenly the market or some war happens, some policies coming out from the government, turn the whole trade on its head. They get out. They don't wait. And some of them actually, the most successful one, saw the trend have reversed now quite strongly to the other side. They got on the bandwagon on the reverse and actually continue to sell and make more money that way. So this is the type of things that nobody actually tells you much outside there. You read some books about it, and you are good students, and you basically used to or been trained enough by the stock market, that is, you lose a lot of money, and you have the tendency to with the head screw on properly and read your review or your own mistakes and past mistakes and learn from them. You can become successful as well. So this Hong Kong index about turn, so to speak, over the week has been a very good lesson for that's a reminder for me, and I hope a lot of you can get that lesson as well. Okay, so without further ado, just go back to the trading update. Basically for Apple has been as usual, just like the Dow Jones. I don't believe it, but the market is going to continue to go up. So overall, the Apple share just continue to be a buy across the board, the short term, medium term, and long term. For Amazon, this you see that Amazon is basically going sideways for quite some time now. It's trying to go above 200 MA, but it has failed. And that was sideways trade. So for the short term, Amazon just turned to a sell again. Medium term, using the Turtle System 2 system, is neutral, and the long term has also turned to sell as well. So for me, Amazon is a sell at the moment. Australian dollar against US dollar, basically short term and long term has been a sell, and the medium term Turtle System 2 is neutral. So basically this is another one of those about turn thing. Australian dollars basically against USD has been going up a little bit, and then suddenly last couple of days, I think Wednesday or Thursday, just do that power turn and drop back down a lot. So the American dollar basically gone a bit stronger. Okay, so that's what's happening. Crude oil and Brent crude basically haven't done much. Is short term is still a buy, long term, medium term is still neutral. I mean, all these talks last week about Trump say they going to put more troops back on Syria and basically safeguard the oil, and then talking about taking over the oil from another sovereign country, so to speak, which I moaned about last week as well. But the market didn't actually do anything. Okay, you're basically just on a side trade. Yeah. So this is I don't quite know, but I thought that's supposed to be good news. But that's the market again. The market's doing its things. So whatever you think about, whatever your thought, your opinions, means nothing when compared to the market price. The market tells you what to do, and you basically follow the market. It could be quite surprising sometimes. In this case, you go sideways trade, it continues to go sideways trade. Even though, in my own opinion, I thought that the American move on Syrian oil is supposed to be a good, good thing, but it didn't. So crude oil and Brent crude, U.S. crude and Brent crude, basically on a side trade, so to speak. Short term is buy, long term, medium term is neutral. DAX like Apple has been buy across the board. So long term, short term, medium term, all buy. The other next one obviously is Dow Jones. Like I said, last couple of weeks last week more or less, is starting to getting I think last 2 weeks now has been making new highs, so to speak. And now, does it really continue? Do you really believe it? I personally don't. I just thought it was very much similar to what people is doing in Hong Kong index. I think in Western world, European as well as America, people are more sophisticated. They do things. I mean, there's a lot more regulation over there, so people have to do things more subtly. So sometimes there may be more long-winded way to do things, to do funny things in the market in the background. So as far as I'm concerned, is Dow Jones, it shouldn't continue to go up because the fundamental view is the world market around the world, not just because of US and China trade war, but around the world, trade is slowing. You might argue American is strong, the American economy, but American is also selling things to other countries as well. Europe is going down, Japan is coming down, slowing down, China is down, Hong Kong is down, Asia is down, or very, stagnated, so to speak. So why the hell America keep on having loads of money? Who is pumping all this money into the stock market in America? Now, as far as I'm concerned, it's this funny QE thing that the Fed is continuing pumping money for overnight market for the bank lending rate and so forth. And I heard they just put a lot more money in lately as well. I haven't verified the news, but the thing is, if the banks are liquid, why the hell they need Fed to provide, the bank of last resort facility to put more liquidity into the market? So, unfortunately, because you have more liquid or basically more money into the market, what does the stock market do? Going up. But I do smell ratchet. But when does the bubble going to pop? No one knows. But while the bubble is continuing, while people's emotions still running high, everybody thinks Santa Claus coming early, whatever, we ride the market, we ride the bucking bronco. Okay, we just got to continue. So for DAX, for Dow Jones, for Apple, it's all going up. We continue to just ride the trend. FTSE, on the other hand, well, short term is a buy, medium term is neutral. Long term now has been neutral, so it's very much like oil. It's going sideways, up and down. It's not making up its mind. Obviously, the Brexit as well as the December 12th election, which I'm going to vote myself. I have no idea what's going to happen, so I think that's going to affect the market and go sideways. Gold, basically, short term is a sell. Long term, medium term is neutral. Basically, medium term turned to neutral now as well. Now, what's actually happening? Gold has been sort of like short term has been sell for the last 2-3 weeks already, or probably longer than that. But it's trying to stay back above the 200 moving average and then come back down again, up and down again. So it's struggling to establish itself, which is fair enough. Dow Jones continuing on uptrend, so it's DAX, so it's Apple and so forth, and Nikkei as well. So that means basically people will put the money into the stock market rather than onto gold, just as a safe haven for upheavals in the stock market. So obviously it's going sideways. So nothing much happening here on with gold. Hang Seng Hong Kong index, which I already said, because of the sudden movement of the price of the index. Price movement, basically short term is a sell, long term is a sell, medium term is gone to neutral. Okay, Nasdaq similar to DAX and Dow Jones up all the way, so long term, medium, short term all up. Nikkei, as usual, is going up as well. So I haven't checked yet, but I think overall Nikkei this year has been making the most money, I think, than any other market. Even better than Dow Jones, I think. Personally, that's how I feel. It's been quite strong. Then the next one is obviously silver, similar to gold. Basically, is short term is a sell, medium is neutral, and long term is neutral. Next is the USD against the Chinese yuan, and that one basically short term now has changed its signal to a buy, so to speak, and medium term is basically is a sell. The Total System 2 says a sell, and the long term is neutral. So this one is obviously affected by Chinese and American trade war, and we'll see how it goes. It's funny to note that the comparison between this and the US index, which is dollar index, which I don't really track, but I think stay above the 98 from gone down to 97, even touch 96 and come back up to 98.2, so to speak. So it's up and down a bit, but it's not as high as what previously almost like 99 a couple of months back. So obviously the Fed might continue to lower interest rate. We don't know yet. But people continue going to the U.S. market because, the Dow Jones is moving really relatively good in the stock market, so to speak, for the last month, and making new high last couple of weeks as well. So people buy more dollar so they can go into the stock market in America. So it sort of tells, that's why that's my view, the USD is still going up rather than down, with the Fed's already reducing interest rate. So it's giving some sort of support. Next is USD against Japanese yen. Short term is a buy still, medium term is a buy, but long term has gone neutral now from a buy last week. Now remember last week I said the price, this index, this currency pair, try to go above the 200-day moving average and try to stay up there. It did for less than a week. It basically up and down there a bit, but struggling to stay above the 200 days moving average. And also in the price action there's on the price chart, is having a rising wedge formation for quite some time now, for the last 2-3 months. And this one is something to watch out for, because you have the rising wedge formation, you have a failure to stay above the 200-day moving average. Okay, not as bad as the Hong Kong index, just touch and stay above one day and then come straight back down the next day. That's a very strong sell signal for me anyway. But this rising wedge is a concern to me. However, like I said before, it's not moving as fast or as bad as Hong Kong index, and we just have to watch out. So somehow it's just my funny feeling that it might not work out, but my trading system say is short-term, medium to buy, neutral for long-term, but watch out. Okay, watch out on this one. Obviously, the British pound against Japanese yen, US dollar still buy across the board as usual. Even though we have Brexit, the British pound is still relatively stable. It's doing a sideways trade, but still above the 200-day moving average, which is long-term is good. Medium term is good as well for the Total System 2 as well as the 2ATL system. So it's a buy across the board. So here's basically just my update. So this basically what I'm saying here is so far we have seen the price of across a number of markets supposed to go down. They didn't. As things, like American, the index is supposed to go down. In my view, it just continued to be breaking new highs, and we just wonder where the money is, what's popping it up. But the market is doing its things, so we just follow. On the reverse, on the Hong Kong index, similar things happening to American indexes. Some things popping up the Hong Kong index, and they can just do about turn things very quickly. So it's very much like what comes to mind is like turkey farmer. You love your turkey for like 364 days. You fed it nice, keep it warm, keep it disease free, and then suddenly on the last day just before Christmas, you chop them all. Okay, and then basically it became a dinner. And one thing that also come to my mind is I've read some books of things that I think that'll be good for ending this episode, is that people in the stock market, I have a quite a strong and healthy skepticism about the stock market or the money market in general. People do anything for money, and a lot of it doing quite underhandedly things. So long as not get caught, they will continue to do so. People just dance around regulation. But I think this one comes from America. I read some article somewhere a long time ago, and basically it said the financial industry are very cunning folks. They're telling us, the people who put the money in the stock market, the pension fund, and so forth, that the foxes will look after you. They will look after your interests. They help you to grow, make you occupy, help you to have stronger friendship with each other, have a better place to stay, better food. But every so often, some of the chickens suddenly disappear. Most of the time, it's the old one or the weak. And then the market, in this case the foxes, will say, oh, that's just a general thing. They just gone astray somewhere or fall in the hole. It's fine. Then every so often, they create some sort of panic. And then suddenly some chickens gone somewhere or fell by disease or whatever, or killed by disease. But the foxes are cunning enough not to kill all the chicken, because they know they need the chicken to survive. So what they do, they would every so often on a regular schedule, so to speak, kill off some chicken so that they can eat, have a big fat chicken dinner, so to speak. And they fed the chicken beforehand really well. When they really grow, really feeling really so confident, so loved by the market, and boom, something happens. Boom, chicken's gone, become chicken dinner for the foxes. But the foxes are cunning enough to not kill everything, not to kill all the chicken, and continue to nurture the rest of the chicken, tell them whatever lies it is to help them to forget about what happened last time, and say it's always next time is different, this time is different, it wasn't like before. And then next time some other things happen, again similar situation, some chickens disappear. Okay, when they gone fat and healthy and have their guard dropped, and then suddenly chicken's gone. So beware of the stock market, beware of the financial market, beware of what other people tell you in the stock market, how things are. If you have a good positive edge system, stick with it. Think like a casino, okay? Trade as many as you can, take as many signals as you can. You play the long term, but beware people do anything for money, and beware of the financial market. People are not always that nice out there. They have some hidden agenda. So I think the best thing to do is to be very much like Robert Kiyosaki. It's best to teach you how to fish, like give you fish. So in here, it's one of this channel that emphasize on, just like a lot on the internet and out there on podcasts, is we help you to understand the stock market, or how a trader does, in this case trend following. But we want you to learn how to trade. Nobody look after and care about your money more than you do. So at this note, I'll end my podcast for today, and I hope you enjoyed it, this episode. Thank you, and speak to you soon. Bye.